Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are off the lowest point of the day, but trade with losses. The Nifty faces resistance around the 12,000 mark. Auto, metals and PSU banks are adding to the pressure. Inflows into equity mutual funds see three-time rise in the month of December. Total inflows stood at 4,500 crore rupees compared to 1,300 crore seen in the previous month. Commodities too are off the highest point of the day. Brent crude is below $70 mark, while gold is trading below the $1,600 mark. And a Boeing 737 bound for Ukraine has crashed in Iran just minutes after takeoff, killing all 176 people on board. Good afternoon, Neeraj. We've recovered from the lower levels, but there is resistance around the 12,000 mark. Let's see if we can surpass that mark. I think we're just around there now. Yeah, and thankfully the plane crash is not being seen as arson, which is actually a big respite. Otherwise, there would have been serious geopolitical stress. But yeah, we've bounced back above 12,000 or in or around the 12,000 mark for the Nifty. Not bad, you would have to say. I think the markets and all markets will not take too much of a directional position in the next 1.5 hours as well, ahead of President Trump's statement, US President Donald Trump's statement. Slated to come out tonight our time, but yeah, 0.5% or near 0.5%, even for the Nifty bank near 0.5% or thereabouts, so no big changes there. Quickly the heat map and show you what's moving and what's not. We keep it very stock specific. I don't think index specific moves will happen. Asia has been a big sore point. The last 7 days now the stock has corrected. We'll talk about it a bit later on. Larsen is corrected about 2.5. There's weakness in Infosys ahead of the numbers day after tomorrow. I don't know if the market is reading too much into it. Let's wait and watch, because IT otherwise has not had a bad day. As you can see, HCL Tech is in the green, TCS is in the green. So IT is not doing bad. Infosys individually is doing bad. So they're very interesting price movement. What is doing well? As I said, TCS is doing well. Bharti's bounced back a little bit from the lows of yesterday, and Bajaj Finance recovers, so about 1% higher for this one. Not bad going, but a lot of red, very little green, but no big palpable signs of worry, Devina. It is still business as usual.
Digested.
It has been
in a way. You would have the SGX Nifty indicated a slightly sharper correction in the morning trade, but I guess immediately post opening it sort of started to stabilize. So mid caps and small cap are in fact in the green. So that is another takeaway from today afternoon session, where you've got the mid cap index and the small cap index, quite contrary to what the large caps are doing, are trading with gains. We've got a GMR Infra, which is your top gainer right now, and GMR Infra has been inching up bit by bit. Remember, just 2.5 weeks ago, it was trading somewhere closer to 21. It's now somewhere closer to 24.2 odd. AU Small Finance Bank, PI Industries, Jindal Steel and Power are some of the other bigger movers. You've got Quest Corp 2 gaining 1.9%. What's losing out is Sterlite Tech, which is down about 3% today. Indiabulls Ventures 2.8%. Adani Power, Prestige Estates and Godrej Properties together looking weak. So real estate as a space, I think the real estate index itself is down about 1.5%. Coming to the small cap index and what is moving out there as well, just to give you a sense of the big changes there. MMTC 11% higher. That's what you've got today for that stock. Metropolis is 5.5% higher. Sun Pharma Advanced Research 4.5%. So again, taking a slightly defensive bet, but I guess it's not towards IT, it's more towards the mid-cap pharma names. Aegis Logistics is up about 2.5%. And India Cements, not just India Cements, JK Lakshmi Cement, Shree Cement yesterday did well. Today too is up in the green. So cement as a pocket is really active on the talks of price increases. Losing out is Suzlon. I think this is the second day on a trot. Now you've got some profit taking on the stock after those a few days of excessive gains. Delta Corp is down 3%. Infibeam, Aster DM and SpiceJet is losing out to 2.5% in today's trade. But also keeping an eye out on what's been happening in the futures and options space. Namit is going to highlight that for us, Navneet.
Thanks for that, Davina. Well, there are a lot of positions being taken, I guess, on the bank Nifty today. But as we speak, I think for majority time today, Nifty was trading below the mark of 12,000. Just in the last 5 minutes, I think we've reclaimed 12,000 mark, and now the index is down just about 0.5%. Premium is 41 points. Nifty futures open interest has also seen some build up. Let's see towards the end of the day whether from lower levels there were some positions taken today or not. And for Nifty Bank, pull up that one on the futures side. Look at that. We've not seen a figure like 35% in the recent past. Looks like there are a lot of positions being taken on Nifty Bank, which did slip below the mark of 50. DMA 31,000 seems to be a big support there. Premium has fallen from those levels of 200 and now 50 just in last 7 to 8 sessions. Volatility is back in action, and today you did get India Volatility Index nearing the mark of 16. So around these levels, if there was fresh buying to come, it would be a little bit difficult from the bulls side. You need to see volatility index moving back to those levels of 12 to 13. Very quickly, then on the option side, what levels to watch? Today is the penultimate day to tomorrow's weekly expiry. 12,000 call has seen fresh riding, though we've crossed that mark. Important to monitor if we can close above that mark or not. 48 points, remember, is the premium. So rider of this strike is pretty much safe till the time index trades around the mark of 12,050. While on the put side, the bulls will look to defend the 11,900 mark. Remember, we did that in the opening session itself. 12 lakh shares have been added, and 11,950 has been a good resistance for the day. As I mentioned, we were trading below the mark of 12,000 for majority of the session, but above the mark of 11,950. Very quickly, then on the stock future side, Infosys comes out with its numbers on Friday. Yesterday, in the last hour, you did see the fall coming in, and today is the third straight day of loss. It's fallen towards its 50 DMA. Maximum open interest on the call side, 750 and 700 puts. So that's a range probably you should watch out till the numbers come out. Remember, it has retreated from those levels of 750 just in last two sessions. Ramco Cement has crossed 50 DMA, significant build up on future side. Long positions continue for this one. And cement stocks being in focus. The biggie Ultratech has the stocks crossed the 200-day moving average. A lot of technical analysts have been giving a buy call here. And in fact, if you look at the returns, the stock's up 7% so far this month. And it's also gained on high volumes on the cash side, which is a good sign. As you can see, the white line is projecting today's volume vis-a-vis the average volume that we've seen for Ultratech in the last 20 sessions. On the future side, open interest is just up by about 4%.
All right, let's begin with a global opinion with the escalating geopolitical tensions. Jonathan Schiessl of IIFL Asset Management is joining us right now on the show. Jonathan, thanks very much for joining us this afternoon. You've got to keep it a day at a time. We've seen a retaliation from Iran today, and the repercussions of the same have been felt across the board, across various asset classes and across equity markets too. What is the sense now in terms of whether or not this could worsen in a way?
Yeah, look, I mean, obviously a day is a very short time frame to try and fully analyze and work out what might happen with this situation. Clearly, it's been brewing for some time. But obviously, you know, if you just look across the globe, look at most global markets, US, etc., we are at or very close to all-time highs on equity markets. So, you know, I think the reality is, you know, the markets have been building in a fairly optimistic scenario about a recovering global economy, about a trade deal with the US. And I guess those forces are still very strong at the moment. So, you know, we take it a day at a time from a geopolitical perspective. You know, and I think perhaps markets are being a bit too, you know, optimistic about that whole scenario, the geopolitics side, but let's see.
So in your assessment at this point, equity markets is still an investable play? I mean, it should not defer you from making investments even at current levels across the board, be it India or be it other emerging markets. Do you see equity flows still picking up strongly?
Yeah, so if you look at emerging markets in particular, obviously they had a very strong December, particularly led by Chinese markets and various other emerging markets, which are more export type economies, on the back of obviously hopes of this phase one trade deal between the US and China. You know, obviously China is sending a very powerful delegation across to the US to sign this deal, you know, shortly. And therefore, you know, you could argue that there has been quite an aggressive adjustment in the global economy to the reality of where we are today. And therefore, if you look at, for example, many Asian emerging markets, they look quite attractive from a valuation perspective. Yes, India is obviously trading a little bit higher, and we have our, you know, India has its own issues. But certainly equity markets in the emerging market space probably still look quite attractive for the time being.
Within that too, India on a relative basis has been an underperformer compared to some of its other emerging market peers for issues of its own. We've got, you know, advanced GDP estimates suggesting that, you know, for FY20, GDP could go as low as 5%. Is that a number that would scare a foreign investor from investing more money into a country like India, or probably have better options elsewhere?
Yeah, look, I mean, obviously India, as you rightly say, underperformed the emerging market space last year. Obviously, the issues that India have been having with vis-a-vis a growth slowdown are well understood and known outside of India. I think there is hope and expectation clearly that's seen by the foreign flows towards the last quarter, where we saw significant foreign flows into India. There's that hope that the GDP recovery will obviously start kicking off in the next quarter or two. And obviously there are some green shoots appearing here and there, with regards to the macro data. But I think, yeah, a very low print of 5%, which obviously the markets starting to speculate on, wouldn't overly worry investors. I mean, clearly investors try and forward-looking, and therefore, investors are positioning for that recovery when it comes later on this year.
So what should the focus be, Jonathan? While obviously noises across the globe are present, does one from an India-focused approach only lay eyes on what is the earnings potential, how companies are growing here, and what kind of growth projections do we have, or something else?
Yeah, absolutely. So I think the key, and the key that's been very frustrating for people who look a little bit deeper into India in an emerging market context, is that lack of earnings recovery. We've been going on for how many years now with effectively an earnings recession in India, and last year was no different. And then obviously every year the street starts off with a fairly optimistic number, and then as the year goes on, you see cuts to that number. And I think unfortunately this year will be no different. I think you would see a substantial increase in foreign flows into India if the earnings came through. The reality is we all know that the earnings for the upcoming quarterly season will be dominated by the banks, so they shouldn't be too bad. But I think what people will be looking for is a more broad-based recovery. That's probably not going to be possible in the upcoming earnings season, but probably next earnings season, investors will be looking to see a recovery in the more domestic plays in consumption, et cetera, et cetera. That's not just driven by discounting, and those other factors. So, India is a market where people see a lot of potential going forward, and I would agree with that. But I think there is some frustration that this earnings recession that we've been in for so long doesn't look like it's going to recover anytime soon.
Jonathan, as you already highlighted, earnings have been elusive in the last 4 to 5 years now. Valuations of Indian markets are expensive. The advanced GDP estimates have pegged growth for FY20 at 5%, which will be 11-year low. But the fund flows, Jonathan, in the last 3 months from the FI community have been good. We've seen some flows coming by. What explains that? So what's that one factor which is still keeping FIs bullish on Indian markets?
Yeah, I mean, to my mind, and I haven't seen the data exactly, but I think it's more of a reflection of developed money, developed market money coming into the emerging markets group as a whole, and clearly India, which is just under 10% of obviously the index, will get its fair share of that flow. So I think probably it's less India-specific flow, more emerging market flow that's been coming into India. I think it's quite obvious that if this trade deal does get signed, when you look at markets or even stocks in China, for example, that are similar to stocks in India, they're trading in some cases at a sort of a 30%. Or even 30 to 60% discount to equivalent Indian companies. So I think other markets, with the trade uncertainty out the way, the Chinese-related markets will probably be a favored destination in the short term until we see more evidence of some sort of macro recovery in India.
That's a very valid point you made, Jonathan. It's more of emerging market money and less of India-specific money. And now, with US and China trade, the phase 1 trade deal, which is to be signed on January 15, if there is more progress towards that trade deal, then within the emerging market basket, do you see shift of funds then maybe from India back to China?
I think it's entirely possible. I mean, clearly India, when in the midst of all these trade uncertainty, India was held out as a beacon of stability, not very export or very un-export dependent, and very unreliant on China. And so, being predominantly a domestic story. Obviously, if there was some money that was hiding in India, and there is some more certainty about the relationship between China and the United States, then there is a potential for some of that money to shift out. Yeah, absolutely.
Okay, Jonathan, we leave it on that note. Appreciate you joining us and taking us through your views on the Indian markets. On that note, let's go across to the cabinet briefing underway right now.
Out of which, say, you can 100 million ton is non-substitutable, but still about 135 million ton, which was substitutable, has been imported. The total cost of that is 1,71,000 crores. It has costed to the exchequer. And as I said, and Prakash ji has also mentioned it, we are having for the fourth largest resource in the world. So keeping that in mind, the Coal India, which is a major player, the adequate coal blocks have been allocated to them. And we have given target to the Coal India to achieve 1 billion, that is 1,000 million ton by 23-24. Whatever the support is needed to Coal India, that has been provided. And adequate blocks have been allocated to them. Before going to some of the details, the more details will be provided after the promulgation of the ordinance. But some salient feature before quoting, I would like to tell that Coal India will be supported and it will produce 1 billion ton by 23-24, and all needed support will be provided to it. And many actions have already been taken. Consultation is also going on with all the subsidiaries. And the interest of the labor will also be kept in mind. Having said that, today the cabinet has given its nod to promulgation of Mineral Laws Amendment Ordinance 2020. This will have this will have the impact, that is number one, growth in ease of doing business, democratization of the sector by opening it up to anyone willing to invest, means end use restriction. And in the August itself, the coal sector is opened up of the FDI. Previously, there was a restriction that anybody to participate in the auction, he should have the operation, coal mine operation in India. That restriction we are removing. End use restriction we are removing. By that, anybody can participate in the coal auction. And also you are all well known that CMSP Act, in the CMSP Act, the 204 blocks which were cancelled by Honorable Supreme Court, there was a restriction for the allotted to the end use, there was end use restriction was there. The Supreme Court, after the cancelling CMPS Act, this provision was there. And at that time, that decision was taken, but now we feel that because of this end use restriction, the participation in the auction, it was restricted, it was comparatively less. To quote the figure, out of 200 coal blocks which were cancelled, so far around 99 have been either allocated or auctioned. Only out of 99, 29 have been auctioned. And auction, because of these few restrictions, auction also was limited. Now that all the restrictions we are withdrawing by way of an amendment at present with the promulgation of the ordinance.
Okay, we'll of course keep on giving you updates, but one of the things that came out was they are removing the clause which for FDI in coal mining in the country. The clause earlier was that anybody who has operations is the only one that can bring in some money. I think that was been removed. Maybe it helps some of the individual names. I think though the interesting bit would be to see what happens to Coal India individually as a result of this. They have said that they'll give all support to Coal India, so on and so forth. But the fact that FDI in coal mining has been removed would mean that Coal India will no longer be the dominant coal player in the country. Now, this is a long-term game, but short-term trading reactions would happen, and that's why I think Coal India is correcting. Let's get in Daljeet Singh Kohli of Valentis Advisors joins us right now on the show with his market opinion. But Daljeet, good afternoon. Thanks for joining in. Best wishes for a happy 2020. Can I just start off with this piece of news first, because we've just come out of the cabinet briefing and they've said that coal mining, FDI in coal mining will no longer be subject to a clause of operations in the country, and therefore, to my mind, it opens up possibilities of competition in coal mining in the country. Maybe it's positive for the country. How your views here, and what does it do to maybe Coal India?
Good afternoon, and first of all, Happy New Year to you and your team and all the viewers.
Thank you.
Now, see, on coal, I think our governments have been just messing up the entire thing. We have seen how the working coal mines were closed because of Supreme Court decision, just because of some political reasons, and then for last 5 years we have not seen anything happening. Now the first thing that comes to everybody's mind is how to dismantle this monopoly of Coal India, and most of the policy actions are taken accordingly, that how should we dismantle this monopoly. Now, I don't think that's the best answer, and that is the need of the hour. The need of the hour is probably that you have to make sure coal is available for power, and it is available at reasonable rate. In any case, right now power generators are not crying that there is a huge problem of coal availability or anything of that kind. To get this FDI in coal may be good for, as you said, it is good for the country in the longer run. When you open up the sector, there is a lot more competition there. But I think this sector needs a lot more deliberation, a lot more understanding, and domain understanding to do what is required to be done. Not just saying that you disintegrate Coal India into 5 subsidiaries, get them listed, you will get value, or start getting FDI and then it will do something. I guess it is all not going to help in any ways. For the time being, in the short term, yes, Coal India, it will be negative probably, because they will have to face competition. But one thing we should keep in mind, that Coal India has the biggest advantage that of mining costs. No, it has the least mining cost, and it doesn't pay too much for the rights to mine because of the nomination from the government. So that anybody else from outside cannot compete probably. That is the reason they can produce coal at such low price, which no private player or anybody else can do. So I think there is, to my mind, absolutely there is no need to remove this monopoly. Probably many more other things, and efficiency has to be built in. Otherwise, and Coal India is the best asset probably India has, which should continue. I think there is other considerations which are going on in this sector. So for time being, yes, it is negative for Coal India. In any case, we don't buy such stocks, PSU stocks, mostly in our portfolio, mainly because of all these interventions from government. So for us, it is in any case an immaterial news.
Daljeet, getting back to the markets then, and the broader market space, what's the view now? I mean, the start of January has been very eventful across the board. Various data points, various events have weighed down on the equity market sentiment. But how are you positioning?
this is the time where the dichotomy is at its best, no? Markets are index-wise showing you some other picture, and economy is showing totally different picture, no? And this is the biggest confusion. We also know that index probably is not reflecting the entire problem of the entire market, or there are only a handful of stocks which are driving the index. But nonetheless, the numbers that show is economy is at its worst phase. We have seen yesterday's numbers also, and probably that next 1 year also not looking very bright on any improvement or recovery on that side. So we will have to negotiate this strange environment where economy will not will keep on dragging or will move on slowly, steadily, but markets will do what they are doing right now. So at this point of time, I think it is more important to be positioned to your conviction ideas, to bottoms up approach. You can't take a big theme approach or a big structure or top down approach that this particular sector is good, this particular theme I will play, because I don't think you will get that kind of an opportunity. Within the sector, within the theme, you will have a lot of dispersion. So one company can do much better than the other company within the same sector. So I think we are going purely by that approach and looking for stock specific ideas in the broader market. Our hope is that probably market will broaden out over the next few months, 6 months or so, mainly because of 2-3 reasons. One, that we have seen already a big impetus has been given to the corporate world. Now, to assume in a country which has so much of population and so much of poverty and all other things, that there will nothing be given to the common man, probably doesn't sound very politically feasible. So we should expect something to happen in terms of tax rate cuts or something in the coming budget. Second, because of the very good monsoon, the second half crop should be much better, and that should result in rural distress abiding a bit, slowly, steadily going, slightly reducing. So that will also help. And the third, that we have seen obviously that there has been too much of polarization in the market. There is a limit where we have seen that almost at the peak we are within those top 10, 12 stocks, and other market is just being ignored. As these smaller companies, middle companies, they start showing some numbers, some visibility, green shoots, probably markets will start looking at them. So that gives us a view that probably will broaden out. But of course, we are not looking at 17 kind of scenario where everything and anything will move. Probably first movers will be high quality mid cap stocks. So maybe in the ranking of market cap wise, you can say probably 250 on or around 250 to 300, 400 number kind of things.
Right.
Those kind of companies should start looking for.
Yes, they should. Daljeet, just one final question, and that's on a specific pocket of PSUs. I won't ask you to comment on the whole pocket, but with the uncertainty around crude, do OMCs a strict avoid, or is the recent few days correction an opportunity to invest for the long term?
For us, it has been always an avoid because of this. We know that one finance minister's 1 day, 1 rupee decision caused what kind of havoc in these companies, no? So if we remember those kind of instances. So for us, it has always been an avoid. I think there has been a lot of buzz because of some disinvestment and privatization talk going on, and that is why the sector started getting some traction. But in terms of fundamentals, I don't think there is a value there, but there is a lot of interference from the government and there is a lot of uncertainty on that. So we tend to avoid this kind of companies.
Okay, stay on. All right, Daljeet, we're running a little tight on time, but it was great having you on the show and getting your thoughts on the platform. Thank you so very much for joining us this afternoon. That was a fundamental view that's coming in from Daljeet Singh Kohli, but let's also get in a technical perspective now that we're at these crucial levels of 12,000 in and around that marker. Last few days we've breached down below it. Let's see whether today's close is yet again below 12,000. Jai Bala of Cashthechaos.com is joining us right now on the show. Jai, thanks very much for taking out the time. Let's talk levels now. On the index, it looks a little fractured. What's the sense on what levels we could anticipate?
You're right, Devina. Good afternoon and Happy New Year to all. Basically, 12,100 was very important for me, and the markets broke through those levels. And the next nearest short-term support for the markets comes in about 11,830. So I think this could be the start of a large correction. And I've been pointing out several times all through November and December that, this is a weak uptrend. And, you should keep moving trading stop losses up. And that's the trading stop loss was 12,100, and that's been broken. So the amplitude of the correction, which I'm anticipating, could be retracement of the entire move from September. So let's see. But the 11,830 level is very crucial. Once that's broken, this large correction that I'm anticipating gets even more probable. So the banking index is particularly more vulnerable. 30,500 is the nearest support for it. And if that goes, I would expect something close to 26,000 from a medium-term perspective.
Yeah, great call on that, Jai. In fact, you were a few of the technical analysts who'd been calling this out for some time now. Individual stocks then, Jai. How does one start to look at a trade formation there?
Yeah, L&T looks pretty weak at current levels. I would expect it to decline to lower levels from here. So one can trade short at current levels, place a stop about, something like 12. Expect 1250 to 1200 in L&T. I should place a stop about 1350. That's the price objective for it. And Tata Motors DVR is actually making a lower low, whereas Tata Motors has made a high low. So basically, there's a divergence between Tata Motors and Tata Motors DVR. So I think probably it's some dividend stripping or something is happening here. It doesn't matter, whatever the reason. One can trade short here again with a stop above 81 with a price objective of 65.
Jai, have you been tracking the other asset classes then, which have been in focus, be it the yellow metal and the crude prices? It looks like it's a risk-off trade which is working out of late.
True. Gold has been seeing a spike, but from a slightly medium-term perspective, unlike what others are anticipating, I'm not expecting record highs. I think gold is going to surprise a lot of people. It's going to start a medium-term reversal from around 1610 to 1625. So, this is gold denominated in dollars, but gold denominated in rupees might be a different story because I expect the rupee to weaken much from current levels, possibly even record lows. And because of that, gold denominated in Indian rupees might appreciate. But whereas gold denominated in dollars are likely to see a different move. So, so be careful about what you're choosing to trade. And as far as Brent goes, at the moment, I can't see anything bullish beyond 72. I think the Brent will stay under 72. If it does change, break past 72, I'll have to reassess my view. But at the moment, I can't see it get any bullish beyond 72.
Okay, remember Brent crude has come off from those highs we had seen in the early morning session, while Indian rupee as well. I think the low for the day was 72.07 and right now it is at 71.88. So there is some recovery when it comes to Indian rupee to the dollar that we've seen in the intraday session. Jai, just one pocket which has been in focus today as well as yesterday. These cement stocks have finally started to participate. Look at Ultratech. It's now crossed past its simple 200-day moving average. And a couple of other stocks from the mid-cap space. JK Cement has been trading at its 52-week high. Is there anything specific you're tracking here on the charts where a position can be taken?
You hit the nail on the head, Navneet. No, this is a very interesting sector, and it looks surprisingly strong for a weak market. And I like Shree Cement at current levels, so it's got strong momentum supporting it, and I think further record highs are due for the stock. So I would expect somewhere close to 25,000, 26,000 for Shree Cement. I'm not that positive on Ultratech. I usually trade in the direction of the medium term. So Ultratech isn't that great. But JK Cements, as you pointed out, even that's a good one. But that's not an F&O. But I would say Shree Cement is a top ranker within the cement space.
Okay, Jai, thanks a lot for joining us and taking us through your views on markets and also a couple of Indian equities. That's Jai Bala of Cashthechaos, bullish on stocks like Shree Cement as well as JK Cement. But moving on and getting you more technical views, considering we are seeing some resistance around the 12,000 mark, we're joined by Manav Chopra of Indiabulls Ventures. Hi Manav, good afternoon and thanks a lot for joining us. Though we're off the levels that we had seen in the opening trade, facing resistance around the mark of 12,000. Do you wait for any sort of directional move to come by, or are you willing to take a position at current levels, be it on Nifty or even on Bank Nifty?
See, the markets have definitely breached its important daily and weekly support levels on a very short-term basis, and we have also seen aggressive, call writing happening at out-of-the-money calls, which indicates that there would be selling pressure on the high levels. But when we are looking the indices, both the indices, the Nifty and the Bank Nifty on a short-term perspective, it indicates that we would witness some sort of a ceiling or selling pressure in the near-term perspective, in spite of the short-term bounce that we would see and with the news flows that are flowing on the global levels. But until unless there is a major chain of events that would turn around and take the Nifty beyond the levels of 12,150, it's only when we would expect this breach of a breakdown would continue on the upside. But nevertheless, as long as we trade below 12,100, 12,150 resistance level, we could start inching lower in a corrective phase decline manner. The next important support for the Nifty on the lower side would be at 11,800 to 11,900. These are the important support zone, and since we are already in a medium term uptrend which has not been violated, it's only the short term trend which has turned negative. So 11,800 to 900 would be some levels which would act as a cushion for the markets on the lower side. The only concern would be the rupee depreciation, which could act some sort of a throttle for the markets going forward. So keeping that in play, any short term recovery or bounces, at least on the index front, could be looked for some selling opportunity on the higher side, keeping a stop loss above 12,100 levels for the Nifty. And for Bank Nifty particularly, 31,000 would be a very important short-term support levels, and we have seen multiple bounce from those crucial levels. So if we break below 31,000 in next couple of trading sessions, that would further add selling pressure and would take the markets decline further slide towards the 30,500 to 600 levels. And for the near term, I think if we are holding above these support levels, we could just consolidate.
Okay, that's a view on the Nifty Bank. Individual stocks then, Manav. Let's run through your list.
Yes, I have two buy calls. I have two calls. My first call is a buy on GMR Infra. In fact, this stock, after a good weekly monthly consolidation, has seen a good breakout on the daily charts, accompanied by above average volumes. And in fact, previous 4 trading sessions of volumes indicate 150% rise in the average 5 days volume. So it definitely indicates a very strong buying action which has taken place into this, and with aggressive open interest addition further confirms that this momentum rally is likely to continue aggressively on the upside. And the prices too have seen a good amount of outperformance and relatively have outperformed this kind of volatility, which definitely indicates a strong buying action even happening at the lower level. So it's a buy with a stop loss of 22.50 for an upside target of 28. My second call is sell on Havells. In fact, when we are looking this chart on a medium term perspective, it has in fact breached its important weekly support levels of 650 decisively, and today with the gap down opening, if it still continues to trade below the level of 640, we could expect further downside legs into the stock. So it's a sell with a stop loss of 640 and expect lower targets of 580.
Okay. Sunil Shah of Turtle Star is also joining us on the show this afternoon. Sunil, a very good afternoon to you. How do you view what's happening? And if there are some apprehensive investors, what do you tell them?
Well, so I think as everybody knows, it's completely a polarized markets.
Yeah.
It's completely skewed in favor of some stocks. But at the same time, there is a lot of value available in many ideas. So it's about the time period for investment that you are looking at. So if you are looking at a very short-term point of view, I think it's a skewed market. Obviously, everybody knows about it. The reason and the concern also is that all the three things, whether it is investments or consumption or exports, are also taken a backseat. So you do not have a fundamental reasoning also about overall, perspective about growth coming in, or convincing somebody to really go about investing in the markets as well, because the fundamentals are not there. Budget obviously is around the corner. So in case the personal taxation, which for corporates has been reduced from 35 to 25, if that kind of thing happens for individuals as well, there could be spike in consumptions that could come in. So it would be more of event driven, and now the ball is completely in the court of the government as well, that it's about high time that the economy really kickstarts the growth path. So we'll have to see how things shape up from their side. You have this geopolitical issue as well, which is really dampening the sentiments, as it is they were not so positive as well. So it's a mixed bag. It's completely polarized. There is a lot of value, but for that, if you really have to go about 2 to 3 years of investment period, and that's when maybe the money could be made, but not really in the short term.
So the entry point for the long term is really not something to worry about. You could probably enter even now, and then over the next 2 to 3 years make your money.
And would you believe, just complementing that question, would you believe that it will be consumption then, therefore, which could do well? This whole talk of GDP from 2 to 5 trillion, budget giving some dollops to consumption, would consumption be the pocket?
Yeah, so consumption is going to be one pocket. The other pocket, which I think is going to be the change in the management of corporates. Here, let me elaborate that. There have been a lot of companies which have done ills in the past in terms of the loans that they had. And those companies are changing guard. So just an example, maybe a Reliance Nippon, which was earlier a part of ADAG. Now it's owned by Nippon. So the business is intact. The change of management is something which will give the trigger to the idea of investing. Likewise, maybe an SL Propack or a Fortis. All of those would be ideas which have taken a backseat. So maybe even an Adani Gas, now Total coming in. I think it would be the change of management is where the opportunity will lie. It's not going to be just consumption or investments or infrastructure, etc. I would try to look at those companies where there will be change at guard at the top. And that's when, lot can be made, because as it is, those stocks have been beaten out of shape. So they are trading at low end of the valuation because of their concerns. And I think that's where maybe the opportunity will lie. So we'll have to see not the top league of the high quality where valuations are at, 3 sigma levels, neither the bottom, which is saddled with debt. So it's a mid zone where opportunities could come in. I think we should keep our eyes open to keep on reading up where those changes are happening, and a lot could happen there is what I think in the next 12 months.
Sure, we'll wait out for those opportunities. I just want to pull up NMDC stock. I think it's corrected about 5.5% to 6%. Remember, yesterday also there were some jitters around this stock due to allocation of Donamalai mines, which is there in Karnataka. Remember, that has a capacity of nearly 6 million ton to 7 million ton. Because of change in government and change in certain acts and amendment, there is uncertainty whether this particular mine will go back to NMDC or will it go back for re-auctioning, in which all the private players will can participate in this auction or not. But remember, just a history to this case, the state government has been asking for some premium if the NMDC wants that mine back. The lease was over in 2018, and since then the mine is not operational, and because of that we've not gotten any sort of update right now, but there is a sharp correction which is coming in the stock of NMDC. On that note, let's also go across to Ruchit Jain of Angel Broking, who joins us. Hi Ruchit. Before I go to your view on the indices, a quick thought on the stock of NMDC, which is just corrected. It's been an outperformer, by the way, for the longest time, trading around its 52-week high levels. The correction we've seen today and yesterday, do you see more downside from current levels? Would you go short here?
See, I think just because the prices have given a very sharp rally recently, and it has definitely, as you said, it has been one of the outperformers within the metal space. So I think these 2 days of correction should just be taken as a corrective phase within an uptrend. As of now, there are no signs of reversal of the trend. So rather than going short, I would rather look for buying opportunities on dips. 113 is where the support for the stock is placed. So in case if we get the stock on dip around 113, I think the stock would continue its high top, high bottom structure. So buy on dip should be the strategy, and one should look to buy near 113 levels.
Okay, look to buy. That is fresh buy around the mark of 113. Ruchit, what about indices then? We're right now just around the mark of 12,000. We've not seen any major recovery from the current levels. I think for the last half an hour, index has been trading in that range of 15 to 20 points. Would you take any fresh bet at current levels?
A couple of observations what we have seen today. Firstly, there was a gap down opening of about 120 points, but after the gap down opening we have not seen any kind of follow-up selling coming in there. So many times what happens that due to some overnight news, whenever we see gap up or gap down opening, so rather than what market is opening, the follow-up moves are more important. So there was no selling seen post the gap down opening. In fact, we have seen some good stock specific recovery from the lower levels in last 2 or 3 hours. Also, if you look at some of the options data, on the call side, 12,200 call is the highest amount of open interest, which is the resistance, and which we saw even in yesterday's trading session on pullback move. But if you look at the put options, that 12,000 put option of this weekly expiry has good amount of open interest built up. And today, in spite of the index breaching the 12,000 mark, the writers have not covered their position, which means that they are quite confident that the market will not go below 12,000 on a sustainable basis. So I think this is a sign that we are unlikely to go significantly lower from current levels. I think on the index front, we should see some consolidation in this range of 12,000 to maybe on the lower side 11,950 to 12,200 on the high side. And whenever we see a breakout from this range along with unwinding in open interest, then only some directional move could be seen. So we are not shorting the index over here. In case if one has to take just a trading bet, then I think one can take a contra bet and create fresh long positions, keeping a stop loss below 11,940 or 11,950. And on pullback moves, don't wait for big up moves. In case we get around 12,150, 200 range, that would be good enough to square off the long positions as well.
All right, looks like cement is the bigger play. Nonetheless, buy Indiabulls, India Cement rather, is Ruchit's idea, and buy on a Hindalco too. You want to run us through the strategies, Ruchit?
So Hindalco last 4-5 trading sessions has corrected along with the broader markets. So if you look at the recent historical data in the month of December, prices had given a breakout from a long consolidation, and the breakout was around 205. So today prices have again approached that level, and in technical analysis we usually see that the previous resistance is converted into support. So we are again expecting a good momentum to build in from here on. So one can go long with stop below 201 for target of 217. And cement definitely has been one of the space. Entire sector has been buzzing in today's trading session. India Cement, one of the mid-cap name, has seemed to have formed a good support base at lower levels, and now we should see a pullback move towards 86, 88 kind of range. So one can go long India Cement as well. It stopped below 74 for target of 86.
Okay, we'll watch out for some of these stocks as well, so do watch out for these ideas. Now, I want to, before we get back to the fundamental chat, I just want to bring up one stock which is in focus today. While the markets have recovered quite a bit from the lows, Eicher Motors is under some serious pain. It's down about 3%, but it's down about 12% from its recent 52-week highs, and the last 7 days, it's actually corrected 6 of the last 7 days, or all the 7 days has Eicher Motors, and it has corrected on fairly high volumes as well. So I just want to bring up some Bloomberg indicators to just try and explain my point. One, look at this. It's falling today again on above average volumes. So that is part one of this, that today's volumes are higher, but it's not just today's volumes. My producer will bring up the next chart, which will show you how over the last 7 days, Eicher has corrected on above average volumes. The volumes today are high too, and this is much higher than the averages that we've had for Eicher Motors. The average is about 0.13, and the volumes today as well are about 0.184 million. So the stock is correcting on fairly thick volumes, and as a result of which there is a convergence between the target price of the analyst community and the current market price of Eicher Motors as well. So the ANR function shows this to you. Look at these two lines, and that's the current market price as well as the average target price, and there's a bit of a convergence here, as you can see in this line. The yellow line and the white line, they are converging, which means that there is a convergence of the target and the current multiple, and this is despite that the LTM return is just about 1.2%, which is the last 8 days, and the return potential for Eicher Motors too, just a measly 2.6%. So not doing a whole lot, but correcting very thick and fast in the last few days. Manav, just one quick thought on Eicher Motors on the charts before we get back and talk about the fundamentals of this one too. How do the charts appear?
See, on a very short-term scale, yes, there is a breakdown from its short-term consolidation pattern, but this is one chart that, ideally I prefer to speak on a medium-term to a longer-term scale. Also, the kind of a reversal formation, Neeraj, that the stock witnessed, last couple of months, from the month of August, it witnessed a rally to the month of November end. I think that has definitely, so the current decline that we are seeing in the stock is definitely more or less corrective in nature, and I believe in case if the stock sees another dip of 5 to 6%, looking at the momentum on the lower side, it is a good opportunity whereby one should look to initiate long positions. And this phase is likely to be more or less corrective in nature. Yes, the volumes are indicating a short-term momentum, but on the lower side, if we draw important retracement levels, 19,000 odd is a very important weekly support zone, and I sense that could be a good value zone on the technical terms. Eventually, if those levels hold on, we could see a move back towards the levels of 22,000 to 23,000.
Okay. Fundamentally, how is this one placed? There is a lot of talk of a recovery, but that recovery gets sold into Eicher Motors fundamentally, Sunil.
Yeah, Neeraj, I think the company per se is really not showing the numbers. It's more of expectations which is there in the entire auto pack. Barring a Maruti where, the channel inventories have got cleaned up, it's not happened much on the commercial vehicles. So still I think Eicher still will have some time before which any kind of recovery on the fundamental numbers actually happen. If at all government has been talking about the scrappage policy and really the announcements come something on those lines, maybe the commercial vehicles will see some spike in numbers certainly, but till that time not much. Again, you have the BS6 rollouts which are going to come through from April, so people are deferring their purchases right now in terms of commercial vehicle because the longevity of the vehicle is certainly longer than what the passenger vehicle is. So post 5-8 years when actually the commercial vehicle gets sold out, the BS4 maybe the registrations might not happen as well, so people are not willing to bet on that. At the same time, the overall economic activity is on the slowdown with all this GST numbers. The haulage which happens on the commercial vehicles, the transit time is shorter, the duration is longer, so obviously the efficiency has come in the commercial vehicles utility itself, again with the multi-axle. So it's a lot of things playing out, which is where the demand is getting dampened, and that is what is getting reflected even in the Eicher Motors numbers as well. If we talk about the two-wheeler, the Enfield piece, it's getting into other geographies outside India, but it will take some time before which actually the growth numbers come in. So I think it's not so positive for Eicher right now in this juncture, and that is what maybe the market is unhappy about right now.
Any valuation bet then in the auto space, because the tractor numbers of M&M looked good and a lot of brokerages are now getting bullish on this one only because the valuations are looking cheap?
Yeah, so I think if I have to look at autos, I would still go one step backwards in terms of the auto ancillaries. That's where my bet is, or that's what we are bullish upon. The reason being that we think the content per vehicle in auto ancillaries is going to pick up. So the idea that we like, or we have it in our portfolio as well as Minda Industries and Lumax Industries, we think both of them, the content is going to increase. So when this cycle turns around, their numbers are going to outperform the industry growth rate by maybe about 8 to 10 percentage points. And again, in Minda Industries, if somebody wants to get in, maybe Harita Seating is a better option, because there you are able to buy Minda Industries at about 15 to 16% discount. There's a merger which will happen between Harita Industries and Minda Industries, and the swap ratio is going to be some 100 shares of Harita and 152 shares of Minda. So it's going to be technically 15% cheaper for Minda Industries to get into. So I think that's the idea pocket which we should look at, and once the recovery comes in, I think this select auto angs will certainly do better than the industry numbers.
Okay, so betting on the auto ang space when it comes to the entire sector, but pull up TCS. It's a heavyweight, remember. It's at day's high, and index 2 is almost at the highest point, 12,021, and I'm sure majority of the recovery that you're seeing in the last half an hour or so would be contributed because of the gains in TCS. 2.5%, 2254 ahead of Infosys numbers. You are seeing traction coming in for TCS. Manav, on the charts at current levels with the move that we are seeing, what do you do here?
See, TCS in a very short-term perspective is in a very strong momentum zone, and in fact, when we're looking the charts on a medium-term scale, it faces stiff resistance around the levels of 2280 to 2300 levels. Looking at the overall formation, it definitely indicates and hints that it could see a strong breakout happening on the upside. The support for the stock stands at 2200, and overall I think looking at the for the near-term perspective, the way IT index has seen a good breakout, TCS could be one of the outperformers and the leaders for the index going forward. So definitely it looks like a strong buy even at the current zone. Somebody holding a position can also maintain a stop loss at 2200 and trail it for the near term. Once if the stocks breaks 2300 on closing basis, I think the next upside target would be close to 2400 levels.
Okay, I believe you've got the Nifty Bank all set to break into the green now, so just down about 7 odd points, and that's
in the green.
All right, it's there. It's right there at the brink of it. 31,400, and we've got a pickup from the lows for most of those banking majors out there. HDFC Bank, I think morning trades was down closer to 1.5% or even more than that, but that has picked off. And off the day's low is Canara Bank, SBI, Bank of Baroda, Axis Bank, ICICI Bank. All of them have picked up in trade, which is why you're seeing the bank Nifty completely flip over. A quick call, 31,400 now. Ruchit on the Nifty Bank. Any changes in the trade? Any additions to the trade?
I think, as I mentioned earlier, that one should take a contra bet. It was a Nifty call that we had given around 12,000 mark, primarily because there was no unwinding the put option. So even from the banking space, if you see in the last half an hour or 1 hour, the banking heavyweights have been witnessing some pullback move. So I think even Bank Nifty, we should see some pullback moves again towards 70 at 31,750, 31,800 kind of range. For fresh trades, the stop loss is too large, so I would stick with going long on Nifty itself. And in Bank Nifty, if any existing long positions are there, then one can continue till 31,700.
I just want to, one small point. I think there's some chatter about how in this press conference that was done, that there was an amendment made to the MMDR. All statutory clearances of the outgoing leaseholders will be deemed transferred to the new validity period for the clearances, and therefore there will not necessarily be the disruption of iron ore supplies. So maybe iron ore supplies or iron ore prices won't skyrocket, and as a result of which maybe NMDC may have corrected as well. So I just putting two and two together, but that's the chatter in the dealing rooms right now, as a result of which there might have been this bit of a pullback into NMDC.
Even the telecom stocks, I just want to pull up Bharti Airtel. I think that's sitting at day's high. Tomorrow is the Supreme Court hearing, I guess, for the HER case. Pull up Vodafone as well. Of course, that too will be impacted. Let's see what the outcome is. Both the stocks right now are sitting at the highest point of the day. Of course, remember in the last quarterly earnings, both these companies have already made provisions for the amounts that they have to pay to the government. So any sort of development, even if on the positive side, would be a big will give a big bump up, at least to the stock prices of these companies. Very quickly then, just a thought here, Sunil, on Bharti Airtel. It's one of the top performers of last year. Overhang remains. These are leverage companies, both of them, but what are the future prospects? And also the QIP, actually, to add to that, Bharti's, the buzz around Bharti's big QIP, what does that do for the stock?
Yeah, so I think overall, if you look at the sector perspective, I think it's only 3 players left right now. Again, the losses could then result in maybe 2 players standing out. I think it's going to be more important that these telecom companies, with the kind of reach that they have, start generating income from other sources as well. So it's about leveraging their marketing platform on with such a huge customer base. We had just heard about Reliance looking at, doing something on the mutual fund bit for their customers. Yeah. So it's about cross-selling that platform to generate revenue, which will be significantly higher than the ARPU that they are generating. And that's how maybe their entire debt or their entire liabilities could get reduced significantly, because an ARPU is an amount of about 130 to 150 rupees a month. Raising the tariff itself to maybe about 200 can give them some cash flows. But it's about using it as a platform for various other activities. It's like almost for Jio is about 40
150 is still far away, ARPU for
it's
that.
120, 24 right
132,
now.
the average.
Still that's so the aspirational ARPU right now.
So it's now the industry is consolidated, so we'll see those tariff hike. A 10% tariff hike is not going to really reduce your customer base.
Right.
It's more of a necessity now. So it's just all I'm talking about that cross-selling and generating more income from other avenues is what will make this entire business profitable for all of them. But till that time, we'll have to see how many actually survive. So the liability which will come in can perhaps kill one of the two players for sure. So we'll have to see how it goes. And again, on the QIP bit, I think investors will try to look at this clarity first in terms of the liability which is there before committing anything. It had happened again in QIPs for Yes Bank, where the fundraising was done and then the NPA number again ballooned up. So the investors will be more watchful to see any kind of uncertainty of liabilities coming in, whether in the telecom space as well, before going about committing any kind of fund flow to that. So
opposite to what Bajaj Finance QIP is. I mean,
there's a queue for investors, right? So it's always going to be the business fundamentals will decide the investors' flow of money. So I think if the uncertainty is ruled out, then maybe the investors will commit more money for Bharti, but maybe not now.
Okay, Sunil, we'll let you go on that note. Thank you so much for joining us. Really appreciate you taking out the time.
My pleasure. Thank you so much for getting me here. Thanks.
Sunil Shah with his views on the market. We're doing good for ourselves. The Nifty is holding pretty okay, 12,032, not a big damage for today. Recovered smartly from the lows of the day, and the bank Nifty is now comfortable, 21 odd points higher in the green at this point. Just want to take a look at a few other stocks, and then we go across and get to the Fab 4 stocks of the day. Bajaj Finance today is doing okay for itself. You've got the stock at 4,047, up 1%. Some of the other names, ICICI Bank now smartly in the green. You've got SBI 2 at 320 from 300 and lows of 310, so that's picked up. And Yes Bank, now Saturday is going to be the day that you're going to be watching out for with regards to the fundraising activity and what comes out in terms of that meeting. So that stock is something to be watched out for as well. Sharad Dubey is here with us. Let's find out what's made it to his list of the Fab 4 stocks this afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock is Navin Fluorine. The stock was up more than 5% in today's day's trade after the company stated that it has commenced its commercial production in its CPAG extra addition capacity in the state of Madhya Pradesh. The stock has hit its lifetime highs, and the stock is also up almost 10% in the last two trading sessions. Up next is AU Small Finance Bank, which is up almost 4% after almost 14 lakh shares have actually changed hands at around 800 rupees on the BSE exchange. We don't know the buyers and sellers yet, but we'll get to you post the market hours. Up next is GSPL, which is up almost 4% after fresh longs is seen with a high open interest of almost 22% and volumes trading at almost 1.5 times its 20-day average. And the last stock of the day is Ramco Systems. As you see, it's up almost 4% after the company has secured a multi-million-dollar digital solutions deal from an Australian university. So basically, this is a payroll and a software management solutions which will be provided by the company. So these four stocks are buzzing in the space today. Back to you.
Right, Sharad, thanks very much for that. So watch out for all of those four names. Also getting in Yogesh Mehta of Yield Maximisers. He's joining us on the show this afternoon. Yogesh, good afternoon to you. Talk us through what you are recommending and what's your advice to tread this uncertain environment that we are in right now.
Hi Devina, good afternoon. Since yesterday night, I'm just looking out for all the analyst statement that a post-war like of situation in the previous past 10-15 years, every time market has given 25, 30, 35% kind of a return in this range in a year's time. But the thing is, it is a crucial time to fight with such kind of a time when we are really into dilemma, what to buy and what not to buy, or how to deal with the portfolio. What I believe is that we are ahead of earnings season and the pre-budget rally. So mid-cap and small-cap can be quality stocks could be one good opportunity to get into. Secondly, in the large-cap, many corporate banks, good corporate banks like ICICI Bank and Kotak Bank have corrected by almost in the range of 4 to 8%. So these are the stocks where I'm looking at to have into the trading positions for short term at least. Longer term, of course, they are very much intact. I am not selling it. And other one is insurance businesses where I am looking out for if there is any correction, but so far nothing has happened. And in auto, of course, only Tata Motors I am looking at, but nothing apart from that really. And we'll still watch out for, I think opportunity will be there. We may not see a sudden V-shaped recovery in the market so easily, but there will be ample opportunity to get into. So I am very much sure that between 11,700 to 900 it will be a good opportunity to add more and more stocks in mid-cap and small-cap companies.
Okay. Yogesh, stay on with us. The markets are looking fairly placed. So let's take a slight bit of a detour from equities into the other asset classes which are being affected by the US-Iran tensions. Firstly, onto oil, that broke past the $70 per barrel mark after Iran's attacks on US air bases. OPEC Secretary General Mohammad Barkindo tells Bloomberg Television that OPEC and its allies will do everything that it takes to ensure oil supplies to the biggest consumers like China and India. Listen in to what he told Manas Krani at the UAE Energy Forum.
We remain confident that the leaders, our leaders in particular in this region, are currently doing everything possible to restore normalcy, to arrest the situation before it spirals out of control. And I just want to use the opportunity you are giving me by asking this question to respectfully urge all world leaders across the regions to rally round and support the noble efforts of the leaders in this region who have embarked on these initiatives to restore normalcy. We in OPEC, in the last 60 years, we have faced several challenges, including wars, invasions, 6 oil cycles, and each time we try to insulate ourselves from the geopolitics and depoliticize this beautiful resource, oil. And I believe we're going to continue to do this in order to remain reliable, dependable suppliers to consuming nations such as Bangladesh, India, China, many other emerging markets, and to ensure that this beautiful resource remains competitive in the energy transition.
All right, on to gold now, where prices too have shot through the roof. The yellow metal crossed the $1,600 per troy ounce mark for the first time since 2013. So what's the outlook going ahead? Let's discuss this with Sunil Kashyap. He is the Managing Director at Scotiabank. He's joining in right now. Sunil, thanks very much for taking out the time. Let's get in a sense as to what this does for gold. Obviously, now this becomes more important as being a safer haven investment in these uncertain times. But $1,600 per troy ounce, do you see this exceeding?
Well, I think one thing you have to keep in context is we have seen gold going up for over 6 months now, actually over a year. Where it was at this time last year was close to $1,280. So we've seen a significant increase, and we had been seeing it steadily even before this crisis came in. So generally, the environment over the last few months has been quite positive and remains positive for gold.
2020, a great start for gold. In fact, even in 2019, towards the second half of trade, we saw the interest that came about and various other factors affecting the prices of gold. The kind of policy stance taken by central banks themselves loading up on gold reserves. Do you feel all of these factors, aside from the geopolitical tensions, are enough to probably help gold create a new record high, or that's still a far-off pitch?
Well, the record high would be about $1,900, so we're close to about $300 away from that. Remember, we've seen a $300 increase in the last 12 months, so it's possible. I think as it goes higher, there's probably going to be more and more resistance. But I think the driving factor is really going to be just what happens with the other asset groups and what happens with the geopolitical tension. Given where it is right now in terms of the gold industry itself, I think we're quite happy with the price where it is. The costs are significantly lower than the current levels, so the industry itself is, I think, quite happy. But the future, how high it can go in the future would really depend upon what we see in terms of the overall economic environment and plus the geopolitical situation.
Okay. Goldman Sachs earlier this week said that the yellow metal may actually prove to be a better bet than oil amidst this crisis. Do you concur? What's your own internal target for gold?
Yeah, I mean, I think the difference between two commodities is the underlying demand for gold remains strong. The physical demand in terms of jewelry demand is strong, both is in Asia as well as in the West. So that underpins the gold prices, whereas in oil, there's been some question raised about the whole fact that we've reached peak car production levels around the world, and maybe car usage is going to reduce, use of electronic vehicles will increase. So the underlying story for oil is not as bullish as it is for gold.
Do you track in gold in rupee terms, while obviously you have the currency playing out in terms of what the domestic gold prices are doing, that too at elevated levels? You have a view there?
Yeah, I think gold in rupee terms has always been really driven more by currency weakness, it means the rupee weakness, rather than underlying international trends. But they tend to work hand in hand. So whenever you have a situation where there's geopolitical tension, the currency weakens and the gold price goes up, so you see a double whammy impact. I think most people expect the rupee price for gold to remain above 30,000 rupees for the rest of the year.
30,000? Is that what you said?
Yeah.
It's at 40,000 right now. So you're expecting a correction?
Yeah. The recent increase has been, has also been factored in. A lot of the price changes in India depend upon also what the local tax rules say. So right now, the local taxes create a 15% premium in gold prices in India compared to the international prices. And that premium will really depend upon what happens with government policy going forward. There is some talk that the duties may come off, and that may impact the prices also.
Okay, Sunil, we leave it on that note. Appreciate you joining us and taking us through your views on where the gold is headed. But there are some stocks, by the way, which do get affected by yellow metal. Pull up tight and let's see what that one's doing. Remember, just a while back, a few days back, they came out with their quarterly update. They had cut down the guidance with regard to their jewelry sales to 11 to 13% from the earlier guidance of 20%. Yogesh, I'm going to come to you. The stock's under pressure, down 1.5%. Within that, the retail sales of the company were up nearly 15%, but I guess it remains to be seen how much was the volume growth in that because of higher prices. Of course, there would be value growth too. And not too sure if, at these higher levels, people would be comfortable buying gold. They could defer their purchases. Keeping all these factors in mind, do you think there will be an overhang of higher prices on the stock price of Titan, which derives nearly 80% of its sales from jewelry?
Yes, Navneet, but we have seen this trend. I'm not denying that it is expensive one on the valuation front, but the jewelry growth which have come at around 15%, there was one-off with the institutional order of 200 crores. But we have seen migration from 30,000 to 36,000. That time also it was, the people were predicted that it's getting more and more expensive. So probably the sales for Titan in the jewelry segment particularly will get hurt. But in the marriage season, this is the peak season for the third quarter. I think the result will not disappoint, but for the Q4 and Q1 again for the next financial year, these 2 quarters will be very much crucial for this company to show the sustainable growth over the segment of jewelry, which seems to be unsustainable, and any which way stock is around 50-51 times P multiple right now. So probably there is still room for P moderation. So I believe that 1100 or sub 1100 would be the opportunity to get into. But right now clearly it seems that it is a avoid kind of a situation for Titan right now, and overhang will remain there. Yes.
Well taken, Yogesh. That overhang of higher gold prices will remain on Titan. Let's see how the numbers pan out. And of course, the stocks corrected from last quarter numbers till now by nearly 15% after that guidance cut came by. But having said that, it's time to take a look at what the dealing rooms are recommending. And we've got Darshan Mehta joining us with his channel checks. Darshan, first up, congratulations on yesterday's call on Kakatiya Cement, which is locked in upper circuit today.
Yeah, I think it's up 20%, and I think it's present in both sugar cement. both are rallying. Debt-free company, cash-rich company, present in Andhra Pradesh as well as Telangana, where the talks are about three capitals being built, development both on Andhra side, Telangana side. So there is definitely, it's moved up on volumes, and it has rallied at least for the last few days. So cement stocks have done well. So Kakatiya, actually we spoke about yesterday, locked on upper circuit. But some of the stocks that are doing well in today's trade, Bharti Airtel deserves a mention. Two reasons. First of all, there is a buzz of a QIP likely that will happen today. It's moved up on decent volumes, and tomorrow the Supreme Court will give a date as far as the AGR hearing is concerned. So there will be more clarity. Most of the losses, both Idea and Vodafone have already booked the losses or the penalties that they need to pay. If there is any bit of relief that could come in, that could potentially mean something positive for both Airtel and Bharti. But I think the big news is a potential of a QIP opening in today or probably tomorrow. So that's what's got the street more excited. The other stock that is being spoken about is Motilal Oswal. It's up almost 3%, trading at a fresh 52-week high. Some of the HNIs are actively accumulating the counter. Post the demerger that happened with IIFL, there is a lot of anticipation what Motilal Oswal will do. They're doing extremely well on the business side. Their wealth business is doing well. Their AMC business is doing well. Aspire, they've written off the losses, and there is traction there. So that is something that's been actively spoken about. And the final stock is Metropolis Healthcare. Big move today on not very, very high volumes, but it's up almost 4.5%. But dealers believe that the momentum that we've seen in some of these stocks, even Dr. Lal rallied significantly, even Metropolis. So these niche plays in the diagnostic space will continue to attract money, and they will continue to trade at premium valuations.
Well, some interesting dealing room chatter, and Darshan, thanks so much for bringing that to us. We've actually getting some of the key movers getting covered in this. Yogesh, any thoughts on either Metropolis or Kakatiya Cement?
Neeraj, Kakatiya, no clue on that. Yes, but the Darshan was mentioning was very much correct. There is a duo play if you wish to. And on Metropolis, I think the prices are people are chasing growth, and this is one of the company where, in the healthcare stream, where the growth is consistent and visible over next 1.5 to 2 years, and even in Dr. Lal as well. So I think that could be the driving force right now, where growth is visible and people are chasing that.
Okay, some other stocks. I think a stock which is very volatile. Maybe we'll ask Yogesh about it as well. But first, on the charts, Ruchit, look at the stock price of Motilal Oswal Financial Services. It's very volatile today. Was up about 6% a few minutes back. Now has corrected. It's up about 3.5%. But generally, a very strong stock in recent times. How does it look on the charts?
Yes, there has been a high top, high bottom structure in last, since the month of August, and as of now, that structure is still getting continued. So the broader trend is positive, just because the prices have already seen a significant sharp up move in last 2 months, and the swing high which was seen in the month of May 2019 was around 790. I believe was around 850 kind of level. So prices have reached that resistance, hence we could see some volatility, but overall trend continues to remain positive.
Okay. The other one, which has done very well, and Manav, if you can look up the charts of Navin Fluorine. Now, viewers, I'll tell you what's happened today. We spoke about it in the morning. Their capacity has commenced production. Navin Fluorine, as analysts have stated and as experts have stated, is a company which has had a very strong balance sheet but has refrained from doing capex. They announced a capex. The capex is ongoing. A part of the capacity is going on stream or has gone on stream today, which will add significantly to volumes and revenues in FY21. As a result of which, I reckon the stock is up about 6% at 1085, is trading at fresh record highs for itself. How does it look on the charts, Manav?
See, the prices are in a very strong momentum. Yes, in the past also, when the markets were declining, the stock witnessed a very shallow retracement, and post that we have seen a very strong trending move, and the volumes too are confirming of this legs on the upside to see more on the upside. So overall the structure is very bullish on the stock. On the lower side, 1020 to 1040 are the strong support clusters, and I don't see that breaking on the immediate basis. We could see this momentum to exceed on the upside, and possibly the next target could be in the range of 1140 to 1180. But overall, I recommend that one should definitely hold this stock, and we could see some multiple few months of bull phase to continue, at least in the stock for the near-term perspective.
Okay, that's Naveen Flooring for you, which is doing quite well, up 6% in trade. Just 10 minutes to go for markets to shut shop. So let's get you some closing strategies from our technical experts. Ruchit, I come to you first. Any BTST or any STBT for tomorrow's session?
So many of the cash names have done much better today, even in terms of volumes. We have been witnessing that almost last 1 week, the non-FNO stocks have been witnessing good amount of volumes. Ipca Lab within that within the non-FO space is one stock which has given a breakout from a consolidation today, and it has also been accompanied by good volume. So we should see a follow-up move in tomorrow's trading session as well. At current levels of 1195, one can go long with stop below 1158 for target around 1250.
Okay, that's a buy on Ipca Labs. The stock's up 5%. Manav, what about you? Your closing strategy would be?
Yes, my call would be a buy on Ramco Cements. In fact, the prices have recently breached a falling trend line drawn from its recent swing high, and we've seen a very strong breakout into the charts with very strong above average volumes, which has exceeded 100% of its last 10 trading sessions. So it definitely indicates a range shift into the stock, and eventually the momentums are indicating a fresh crossover. So it's a buy with a stop loss of 790 on the lower side for an upside target of 845.
Okay, buy on Ramco Cements. Remember, this has been active since yesterday as well. Want to pull up the futures of NIT Tech. We marked the stock for you. In fact, we've been marking it every single day. It's at fresh highs, up 3.5 to 4% in trade, for 5% now. Futures discount has widened. In the morning when we were doing the FNO show, I think it was just about 13 to 15 points. Look at the build-up. At every higher level, there's a build-up now. 25% higher in today's session. Remember, okay, the stocks also crossed the buyback price of 1725, by the way. The last 1 month chart will give you a better sense, because the buyback news came last month itself, in the month of December, since when we've seen a good jump up into the stock price. Last 1 month, NIT Tech is up about 18 to 19%. Yogesh, before we thank you, these mid-cap IT companies, specifically NIT Tech and also Mindtree, they've been gaining traction. They have gained about 15 to 20% in last 1 month. If you've been tracking this space, would you prefer them vis-a-vis the large caps like TCS, Infosys, or for that matter, HCL?
Yeah, Navneet, for especially large cap IT, I will avoid TCS and the Infosys at this juncture. But mid cap IT, of course, provides a good opportunity with the large deal wins or the moderate deal wins, and the client relationship has been on a sustainable ground, and that will drive the profitability for even L&T Infotech, even for Mindtree in that matter. The L&T has acquired this company at around 900 plus kind of a rate, and it is the cheapest available stock with the growth which has been shown by the company in the last 6 to 7 quarters. I think it will be back on track with the rupee tailwind from the rupee for this Q3 numbers will add some more into profitability, and margins will be much stronger than it was earlier. At least 1.5% kind of a jump will be visible in Q3 numbers. So I think Mindtree and the L&T Infotech would be the two where I would look at to add into at this point in time, even though the stock has appreciated by almost 20% from the bottom price. And NIT Tech, I will be reluctant enough to get into, because the buyback has driven the fancy. Around 1700 rupees they have announced the buyback, and stock has now appreciated towards that level. But on the valuation front, there is no much of a large comfort. So I will definitely will not be on a short side, but yes, will not recommend to buy at this juncture. Rather, Mindtree and the L&T Infotech would be the one as a preferred pick.
Okay. There is strength in Bajaj Finance too. In the session today, we've spoken about it, and Eicher Motors incidentally has slipped even more, 4.5% lower now, 19,831. This stock has literally seen some sharp cracks in the last 7 or 8 days. Well, really unfortunate, the kind of moves that have happened from a bull's perspective. Just when the auto space was looking like starting off well, Eicher Motors has corrected thick and fast. Let's wait and watch what happens here. Yogesh, you've looked at some of the brokerage stocks, your own past company, but ICICI Securities and some of the others, they have all been on a roll. Do you like these businesses?
Looking at the volumes in the market, which is now growing, it shows that yes, these companies would have better days again. Valuation front, all are varying from say 23, 24 P multiple to on the lower side 17, 18 P multiple range. I think that will provide a good opportunity for these brokerage businesses as well as the cross function of the wealth management business both together. So ICICI Securities is standalone on the purely on the brokerage side, and the P multiple around 21, 22 times. But yet the growth rate they are showing in the PAT numbers is commendable. So that would be one I would prefer towards. Around 400 plus is the price target right now. I believe that 20-25% appreciation can be is projected over the FY21 numbers. So I think 1.5 years. The rest of the companies are leader in the pioneer and the old age companies, which are now migrating towards new technology and the mobile app and all. That is also fueling more volumes for these businesses. So there also I believe that demerger story, as Darshan was mentioning, could be a one which could play the game, and that could drive some kind of interest towards investors. So that can also be one of the reason, and yes, can be looked at as an investment from current levels.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Just want to mark, as we are about to close and we are almost ending into the green or flat, what Europe is doing and what the Dow futures are doing right now, all will hinge on what Donald Trump says. But you got to keep in mind that the world markets are not approaching his statement with a fear, because his tweet in the morning did seem to suggest that it was not all retaliation on that side as well. Dow futures will come up on your screen, and hardly any movement there, so not bad going. And what is very interesting is that some of the oil marketing companies, the likes of BPCL, have actually broken into the green. 461 and counting for BPCL. Look at that move there. It has actually come back into the green. I don't know if HPCL has managed to do that too or no, but BPCL certainly has. HPCL almost, actually during the day, it kind of broke into the green 3 or 4 times. So that's pretty interesting as well. One or two other stocks, one stock from mine at least, maybe Navneet has a few more, but GHCL is showing some sharp intraday movement, up about 7% right now. Ruchit, you want to come in on GHCL?
Yes, the momentum readings are quite oversold, and no, even historically, if we look at the recent past, then month of August also prices have taken a good support around 180. So today's low is around 181, so that was the support, and I think this bounce back should get extended further towards its 200-day moving average, which is around 215. So I think even at current levels, if one has to attempt a long, the risk-reward ratio could be around 1:1. So, but one can still go long with stop below 180 for target around 215 to 220.
Manav, JSPL up almost 5 to 5.5% right now. What would you advise somebody who's long here?
Yes, in fact, this sector as a whole has seen a very good outperformance, and recently the kind of a decline that we have witnessed, it has been bought into, and since the prices have also bounced sharply from its important support levels, and we have seen a breakout at least happening on the daily charts. I sense on the near term the stock could witness another rally of 4 to 5%. It has an important support on the intraday close to the levels of 165, which could act as a position support and the stop loss. But eventually I expect this upside momentum rally to continue, and the near term targets would be at 185 to 190 on the upside.
Okay, Jamin, stay on. We'll just take in closing thoughts from you, but here's how the markets are shutting shop. Not bad, you would have to say. I don't think anybody this morning would have anticipated this when the SGX Nifty futures were down about 150 points. We are just down about 30 points. So quite a remarkable pullback for the Indian equity markets today, as also for the world markets. The mid cap and the small cap indices will come up on your screen, and flirting between the red and the green for different indices, different mid caps between the two exchanges. The Nifty mid cap in the green, Nifty small cap marginally in the red, the BSE 500 ending very, very flat. So not a bad day for the broader markets too, frankly. The Nifty isn't as much of a kicker today. It's more about what's happening in the broader markets, because a lot of intraday movements. So Navneet will bring you up to speed with that. But let me talk about the Nifty, because there are one or two interesting names there. Bharti quite a remarkable pullback today after the cuts yesterday. Bajaj Finance, 4% down day before yesterday, and now the last 2 days has been okay. And there's some strength in crude sensitives like Asian Paints and BPCL too, which are in the green. What's not done well, quite a bit of cut for Eicher. Coal India, and maybe there is more competition. This stock corrects about 2.5. There's weakness in ONGC and weakness in Infosys. I think we'll do some analysis on Infosys tomorrow ahead of the numbers. The rest of the IT pack is doing one thing, and Infosys is doing quite the opposite. So it'll be very interesting to see what the market perception is with regard to Infosys numbers, and that will be very interesting to talk about over the next couple of days. But broader markets are a lot more interesting than large caps. Navneet, what stood out today?
A lot of stocks, Neeraj. In fact, intraday there were a lot of stocks which recovered from the lows, and we've seen that in the indices as well. So the Nifty mid-cap index is closing the day in the positive territory, so that's a positive sign. But let me begin with a couple of gainers and how we've been talking about the cement companies which have been in focus at least since yesterday owing to the news of price hikes. So Shree Cement once again was up about 2% today. JSPL intraday recovery coming in the last just 45 minutes of trade, as you can see, and the stock also closing with gains of 5%. Then you had Balkrishna. These tire makers also moved around. Look at the stock. This is also closing almost at the high point of the day with gains of 3%. Something like NIT Tech, which we've been talking how the stock has now crossed the buyback price of 17.25. What a stellar move this stock has had in the last 1 month, specifically since the time the board approved the buyback at 17.25. Lot of long positions coming in on the future side, not today, but in the last 7 to 8 sessions. MMTC was the other one from the metal space, which saw buying interest today, so 9% higher as well. Kakatia Cement, which was buzzing in the dealing rooms as well. This one was locked in upper circuit with gains of 20%. And also something like Schneider Electric. We don't talk about this company on daily basis, but this was too in action today. Schneider Electric closing at upper circuit, gains of 20%. On the losing side, NMDC, jitters of yesterday may be flowing in today as well with regard to Donamalai mine. We don't have clarity, but still, as you can see, the stock tank in the last 1 hour of trade, down 5%. TCI Developers was also weak in trade today, so this one saw selling pressure. Actually, no, this one recovered in the last 5 minutes of trade. Maybe Havells was weak, and we did receive a short call technically from one of our experts today, down 2%. And from the auto space, you had Ashok Leyland, which did not have a great session. Ashok Leyland closing with cuts of nearly 2%. I think, Neeraj, the respite is, one would have expected in the morning that it will be a sharp cut we will see because of now fears of war lingering, but it was a sharp recovery that we saw.
Yeah, one just hopes that Donald Trump's statement tonight.
Yeah, the ball's in his court. Let's see what happens.
Yeah, let's wait and watch. But I want to see the volumes first and then the market breadth. But the volumes would be interesting today. Have the volumes perked up on the cash side in the session today? Maybe not on the NSE cash as much because this could be anticipated today, but the BSE cash volumes certainly higher and the F&O volumes remarkably high in the session today. I don't think we see these numbers, even though it's the penultimate day to expiry, but 18 lakh crores, slightly on the higher side.
It is on the higher side, and I think last few weeks it's been a trend that weekly expiries have started to gain a lot of momentum. The turnover on weekly expiry seems to be higher these days.
Yeah, well, let's wait and watch. The penultimate day also starting, because I remember, I think last week too, maybe Wednesday also had a slightly higher number, but this is just too high. But the market breadth should be interesting, and let's see if there has been a clawing back. Actually, not so much. The breadth almost at par for what the average would have been for the day.
Yep, no major recovery, at least for the entire listed universe. But lastly, just take a look at the volatility index as well, I think, which was hovering around that level of 16, which is at higher side. So though the markets recovered, keep this in mind, volatility index did not correct. So it's closing with gains of about nearly 7%. And this could hinder a little bit of fresh buying if it has to come at these levels.
If you could buy the VIX, you would have made 50% in the last few days. Anyways, let's get in the final thoughts from our experts then. Manav, how does this set us up for tomorrow, assuming that nothing untoward happens from President Donald Trump tonight? Can we expect some gains tomorrow?
Yes, see, if you're looking at the charts only on the short-term basis, today's lows on the Nifty and the Bank Nifty would act a very strong pivot for the markets, at least for the near-term perspective, and keeping in the expiry in mind, and for at least a follow-on move for the coming weeks. So, looking at the XGX today, where we were seeing minus 120 points cut on the Nifty, and if we were told that if we will close by minus 30 points, we all would take it with both the hands. So the closing definitely is quite encouraging, but today's lows would be the make or break levels for the bulls going forward. So we have to take this as a very strong supportive benchmark, at least on the low side. Also, the kind of volatility that the markets have started to increase, we have seen a strong jump up in the VIX in last couple of trading sessions. So, the volatility in the markets are likely to resume, and we could see strong choppy actions either side. But expecting that today's lows hold, on the upside, I expect I don't see the Nifty index to break above 12,150 levels on the upside. So the broader range for the markets, I sense, would be between 12,000 to 12,100 for next couple of trading sessions.
Okay. Ruchit, would you take this as a positive sign that we're closing above the mark of 12,000? The options data, there was intraday unwinding which came in on the 12,000 call side as well. What do you do tomorrow if, let's say, the markets open flat? Do you take a trade on the upside?
Yes, probably. Today we had a gap down opening, but one good thing was that there was no selling seen post the gap down opening. Gradually we had seen a good recovery. Cash stocks have again seen very good volumes, and good momentum was seen in the broader market, so which is another positive sign. The 12,000 put option, which has good amount of open interest, that has not seen any kind of unwinding in spite of Nifty going below 12,000. Even that is a positive sign. So I think 11,950 to 12,000 would continue to act as a good support for the market, and on the high side 12,200 is the immediate resistance. So as of now, there is nothing to worry about, it seems. Tomorrow my focus would be more on cash based stocks where there would be outperformance. And yes, looking at closing today, I would sum it up by saying that it seems that all is well.
Okay, let's hope all is well. Gentlemen, thanks a lot for joining us, both Ruchit as well as Manav, on the show today. And as we end the show, Paytm's primary focus in 2020 will be launching more financial services, including insurance products, says top boss Vijay Shekhar Sharma, speaking to Bloomberg Wind's Advait Rao. Sharma also says the company isn't interested in peer-to-peer leading at this point in time. Listen in.
Paytm business model is that you acquire merchant and consumers using payments, and then you graduate them to commerce and then financial services. So that's the business model Paytm has overall as a macro, as a group entity. Different entities have intent to do different things. As far as the plan, of course, is concerned, the last 2 years we did all our commerce and payments, and as you know, payment continues to acquire new customers, merchant. Our primary focus in 2020 will be on launching more financial services. So you can expect brokerage, you can expect insurance brokerage to get launched in Q1 of this year. And as far as the plan, of course, is concerned that we want to do lending or not, we would love to do lending, but we don't want to do P2P lending, and we have not even applied for P2P lending. So we would wait for seeing the SFV license, which may get payment bank may get converted, or other options, or partnering with other banks and lenders. That is how we're doing it, but we're not in for P2P.
But the SFV license, you're looking at it right now, or I understand it's 5-year waiting period.
SFV license has a condition of 5 years active payment bank, so it is going to come later. But till the time period, we are working with partners. So banks and some NBFCs become our partner, and we try building a product that can go to our customers that they use.
Just last question, sir. The Indian payments market has grown significantly on the back of UPI. Where do you think the next generation of growth will come? Will it be from merchant payments mainly, or do you think e-commerce will be the big play for payment companies to make margins, make money?
I think the biggest growth of payment in 2020 and next years we should see is B2B payments, like retail payments of consumer and merchant, like we just discussed today. There is a large number of consumers out there, and there are merchant acquisition that people like us are trying. So this will get sorted. If you were to talk about next set of things that will go, so that would go in business payments. For example, like if you are a manufacturing company, and how do you pay or how do you receive money? You are a services company, multi-organizations. So business payments are much bigger than retail payments when it comes to complexity and opportunity. And that is where I think as a Paytm, what we are going to work on is business payments.